Coming up on Market to Market, the winter weather is no wonderland as cold consumes the U.S. And the biggest stories of 2017 mostly have one common thread. Those stories and market analysis with Elaine Kub next.
Spooked by that snowstorm.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, December 29 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The gifts of the season may already be broken or returned, but those purchases provided a boost for brick and mortar stores. According to the report issued by MasterCard this week, U.S. retail spending this holiday was up 4.9% over the same period last year. Consumer confidence waned slightly in December. Following back-to-back 17-year highs, the measurement retreated 7 points. Oil prices shot up to two-month highs on import demands from China, coupled with tighter global supplies. And this winter will likely be an expensive one, as heating prices are spiking just in time for this week's cold snap. The Energy Information Administration estimates natural gas, heating oil, and propane will all have double-digit increases this season. At least 24 daily record low temperatures were tied or broken on Thursday. Cotton, Minnesota was one of the coldest spots in the country as the mercury dipped to 41 below zero. The bitter chill followed a snow pattern that besieged the Northeast for several days. Josh Bittner reports.
Before the Yule logs were burned up this week, a cold snap gripped the nation from Maine to the Dakotas and points beyond.
Merry Christmas, can you come over and help me shovel?
Blizzard warnings were in effect across New England, where first responders in Vermont cooled on public reaction.
The alarm sounded within the building. Multiple people chose not to evacuate. I get that it's cold. It's a hardship to leave. We understand that. Whether you think it's real or not, when the alarm sounds, quickly get out.
In neighboring New Hampshire, a record-breaking negative 34 degrees Fahrenheit was recorded atop Mount Washington, the state's highest peak, where observatory officials illustrated how quickly boiling water becomes snow in frigid hurricane-force winds. Several other areas of the Northeast were blanketed by snowfall. Erie, Pennsylvania saw a record 65 inches late this week.
All I could do was laugh. You know, it's a little ridiculous, but I keep pecking away at it and we'll get it cleared.
Lake Erie's infamous lake effect had its way with Buffalo, New York once again as road crews kicked into overdrive.
Today we'll be out probably 10, 15 hours easily.
An Arctic blast on the shores of Lake Michigan shuttered holiday plans in the Windy City as well.
The girls wanted to go ice skating and we tried, but it's really cold. It's freezing.
The Pacific Northwest downed an abominable local brew of snow and freezing rain, icing up roads and causing dozens of crashes around Portland and Seattle on Christmas Day.
And I came along and lost control, did a 360, hit a car on the next lane, and ended up here.
And in the upper Midwest, abysmal minus 16-degree cold kept Fargo, North Dakota residents indoors, while more cold temperature records also were shattered next door in Minnesota. Short-term forecasts from the National Weather Service predict more of the same, with additional precipitation encroaching on the Gulf. And with a shallow cold air mass already in place, authorities say some southeastern states could join the rest of the country with freezing rain and snow to help ring in the new year. For Market to Market, I'm Josh Bittner.
2017 may be the worst year for natural disasters. Through early October, 15 weather events each racked up a $1 billion bill, and that's before including California's wildfires. Meanwhile, on the floor of the New York Stock Exchange, the Dow Jones set 87 new record high closes since the 2016 presidential election. As the new residents settled into the White House, the policy coming from the Trump West Wing loomed large over rural America. 2017 was a year of change in America. A new president, policy upheaval, depressed prices. But some things repeated. Wildfires, weather, chemical concerns.
I, Donald John Trump, do solemnly swear.
As Donald J. Trump took the oath of office, the winds of change were blowing around the capital city. The president made good on his promise to pull out of the Paris Climate Accord, the Trans-Pacific Partnership, and kept alive the threat to exit the North American Free Trade Agreement. 5 rounds of talks took place in 2017, but little consensus was reached between the major trading partners of Canada, Mexico, and the United States.
Millions of good jobs on both sides of the border depend on the smooth and easy flow of goods and services and people back and forth across our border.
We have a very outstanding trade relationship with Canada. We'll be tweaking it. We'll be doing certain things that are going to benefit both of our countries. It's a much less severe situation than what's taken place on the southern border.
If any deals are going to be made, they will likely come in the first half of 2018, as elections in all 3 countries are set to take place.
Food is a noble thing to trade. We've got a great story to tell.
Former Georgia Governor Sonny Perdue was the last of the Trump cabinet selected and heard in the confirmation process. Following his swearing in, Perdue toured the country, laying out future plans for U.S. agriculture, including food programs, renewable fuels, and family farms. Part of USDA's mission is to battle wildfires, and crews were working overtime in California late in the year. The first big fire roared through California's Napa Valley region in October, killing 42 people, causing more than $1 billion in damage, and destroying more than 8,400 structures. At the time, it was one of the worst natural disasters in the state's history. Then came the Thomas Fire. Santa Ana winds fueled the blaze that topped 272,000 acres, and it is now considered the 2nd worst fire in the Golden State's history. The hardest areas impacted were in Ventura and Santa Barbara counties. The latter area is home to a $1.5 billion strawberry, leafy greens, and fresh-cut flower industry. Extreme weather also slammed the Gulf Coast as Hurricane Harvey came ashore in September. The year 2017 will go down as the 5th most active season, along with the most major hurricanes since 2005. The damage is the costliest on record, nearing the $370 billion threshold.
I know my son's been out there in the water for 2 days, at least waist deep, working, trying to either move cows to higher ground or get hay to them and see that they're okay.
Fruit in the nation's largest juice producer was ravaged by Hurricane Irma. Some 80 to 90% of the crop in Florida was impacted and could easily top $1 billion in damages. Weather concerns came and went in the Corn Belt, but the biggest storm on the horizon for many producers was the future of the renewable fuel standard. Threats to reduce the level of fuel mixed with homegrown sources soured lawmakers and interest groups alike.
The renewable fuel standard plays a major role in sustaining our ability to continue as an agricultural leader by giving farmers another market for their commodities.
After the arm twisting, the EPA kept 2018 standards near existing policy. But oil state supporters expressed frustration over the process, setting up another tug of war again in the new year.
Frank Landis? Yes. Crystal Rhodes?
No.
The long-sought Keystone Pipeline cleared a regulatory hurdle in Nebraska in November, just days after a spill along the existing pipeline in South Dakota. 10 states in the pipeline's path and others in the surrounding region are deciding rules when it comes to chemical drift, specifically the application of dicamba. Rulemakers from Arkansas to the Dakotas made adjustments in how the weed killer can be applied. Thousands of complaints have been logged in those states over damage caused after spraying. For more on the year that was 2017, download the most recent version of the M2M podcast. The first episode dropped this week, and the next one will be available on January 2nd.
Next, the market-to-market report.
The saying, rain makes grain, isn't limited to the U.S. as timely moisture arrived in South America, improving the crop's outlook there. For the week, March wheat improved 2 cents, while the nearby corn contract lost a penny. China's soybean impurity requirements on imports limited gains in the soy complex as the March contract added 2 cents. March meal advanced a dime per ton. March cotton went higher another 82 cents per hundredweight. Over in the dairy parlor, January Class 3 milk futures sweetened 6 cents. The livestock sector celebrated the new year early. The February cattle contract put on $2.97 and nearby feeders expanded $4.45. The February lean hog contract went up $1.80. The U.S. dollar index continued its slide, plummeting 109 points. January crude stayed above $60 and jumped up $1.95 per barrel. COMEX gold poured on $30.50 per ounce, and the Goldman Sachs commodity index ticked up 13 points higher to close at $441.95. Here now to lend us her insight on these and other trends is one of our regular market analysts, Elaine Kub. Elaine, welcome back.
Always good to be here.
All right, and in case you want to go over things again, you can download or listen to our Market Analysis and Market Plus podcast online anytime at iptv.org/MTOM. All right, Elaine, we've got snow in a lot of places. We've got cold that extends many places, including the wheat region. Do you buy that the wheat kill is because of the cold? The reason for the wheat market improving is because of winter kill. Do you buy that theory?
I think it's really hard to get any sort of a fundamental rally in wheat in December based on worries about the U.S. crop. No, I don't think that's what's motivating it. But when you look behind the scenes at what the structure of the market was going into late December, you had the managed money, the hedge funds and such. They were very net short in wheat. I think 2.6 times as many short positions as long positions. So when you get to this typical time of year when funds and traders and speculators want to close out positions, take their profits in wheat, and we did see this, we've seen this for weeks now, they've been liquidating positions, but in wheat that means short covering. And I think that's why you would see, some positions coming off and day-to-day upward movement.
So Tuesday morning when the markets reopen, if you still want to be making sales, you better be picking up the phone, because do you see that momentum going higher?
Here's the thing about marketing wheat ahead of time. There's no particular time of year. It's not like the row crops where you really are looking for high opportunities in the spring and summer. In wheat, it could happen anytime. So this very well could be the moment for this marketing year to be selling wheat.
All right, long term, what do you think? Is it, we talk nearby, but on that deferred part, do you see the trend moving upward on the chart?
Not necessarily, no. I mean, feed grains in general and wheat, when we're talking about the feed wheat, is part of that problem is that we just have huge inventories all across the globe. There's lots of crops from lots of different countries that are going to come in and keep replenishing those inventories month after month. There's just not a lot of bullish anticipation for wheat, I'm sorry.
All right, well, good to know. That's why we ask.
Yeah.
You don't know unless you ask. All right, in the corn market, we finally have pushed above that 20-day moving average ever so slightly. What's moving this market?
Again, this could be short liquidation. Same story here where the funds were short going into the end of December, and here at the end of December we did see liquidation, and that could be helping it. that's really about the only story you've got, because again, the supply and demand situation for corn has been absolutely neutral. You look at the spreads and the commercial sides of the market, the elevators and the end users, the bona fide hedgers have no reason to worry about inventories. They have pushed basis a little bit stronger, but I'm sure that they probably were able to get some of the physical supply into their hands this past week, because you've got farmers who need to make equipment payments and farm payments, and that will almost certainly continue as we go into the first part of the year. That first week of the year, there tends to be a lot of cash sales.
What about the fact that in the U.S. right now, our corn is the cheapest in the globe? Is that playing into this as well?
That probably helps. Like I mentioned, I don't necessarily think that basis is going to fall apart immediately on January 2nd, but just typically we will tend to see that get weaker.
In January 2nd, that's 2018. Let's look ahead to 2018. Where do you see, this big question, Elaine, crystal ball, long term, where are we headed?
Same place we've been for the past year. I think honestly, this is the struggle for the grains, the row crops, is we just have enough of them. This is a price that the inventory is sort of plugging along at. And there could be sparks in the outer markets, certainly in the stock markets. There's money coming in from the trillions of dollars of new wealth has been created, and that could come into commodities. But the commodities also sort of need a story. They need a headline to bring that money into one specific market or the other. And corn is just not the one that's going to have that story.
Nothing there. But you still see farmers holding on to a lot of corn. Should they be looking to maybe liquidate some of that here early January?
At some point, some folks are going to need cash, so I suspect it will happen whether it's a great idea or not. Longer term, I don't know that we should have very ambitious plans for any old crop, the grain that's in the bins. But longer term, we should definitely be looking at marketing that new crop earlier than usual, because this long-term story is going to be known and understood by all of the market participants for months and months and months.
Is the story any different in soybeans?
Yeah, there's a little more interesting things going on this time of year, right? This is the time of year that we watch the weather in South America, obviously, and that is pressuring. We have a very clear downward trend in the soybean markets and in the chart. This past week, this is again the time of year where we typically have lower volumes and weird, spooky trade. And we did have the weird, spooky trade, but it wasn't because of low volumes. Honestly, the actual daily trading volumes were there. And it's because computers don't take vacation, right? If you have discretionary traders, speculators that would otherwise be taking this vacation week between Christmas and New Year's, that doesn't happen. But there's nobody in there to step in and then say, when the computers get spooked and get on a tear, there's nobody to really act against that. So we did see weird days, perhaps again, liquidation, long liquidation or short liquidation. But the general trend in soybeans is going to be lower, and I'm almost certain that will continue as we see that new year come on, and the forecast in South America is for continued rain, which is obviously beneficial to yields.
Now you have to hope for maybe some, and I hate to say hope against another group of farmers, but a rust type thing or some type of mold. I mentioned it in the leading into the markets here. China is now reducing its 2% impurity of their grain that's going into the country on imported soybeans. They're reducing that to 1% now. There's a theory that that's going to cost us 15 cents per bushel to clean the grain. Do you see that factoring into any of this decline here late week? Because Wednesday, we had a nice run up.
Yeah, and I think, like I mentioned, I think that may just be a fluke of the season. The 15 cents to clean the grain, I'm sure that's true for individual cargoes or for individual bins. I don't think it's true for the market as a whole that the entire U.S. soybean crop needs to take off 15 cents in that regard. I'd be more worried about the fact that our competitors, South America, Brazilian soybeans have higher protein than ours do. So the U.S. soybeans at the U.S. Gulf are cheaper, but we have, sure, impurities, protein. This is not the primary product that China perhaps wants to come and buy, so we're going to have to maintain that discount. I don't know that it's 15 cents, but certainly we will need to maintain that discount to Brazil.
Okay, you can see we had a little bit of correction, but then back down on that chart. All right, Elaine, I didn't ask you what you got for Christmas, but I don't know, did you get anything made with cotton? And we have a Twitter question about cotton that we need to look at right now. And we appreciate everybody who does respond to us at Market to Market on Twitter or IPTV Market on Facebook or Instagram. Richard in Belle Eagle, Tennessee, he's at Belle Eagle 1. He says cotton futures are in uptrends while the grains are flat to down. So he wants to know, let's talk cotton specifically, can it be sustained in in 2018 if we keep buying
Yeah.
you gifts.
Isn't that incredible? I bought gifts with cotton, didn't receive them, but isn't that incredible? I think it's 17% rally since October, since late October. Almost 80 cents. Certainly, I believe it could hit 80 cents and continue higher because this rally could be sustained. It's supply and demand both working there, especially for the domestic, higher quality stuff. And again, there's like the one shining example in an agriculture commodity market where you've got a headline and it brings in those traders, those speculative traders, that new money that's looking for a place to go. We are seeing new money coming in from the speculative side of the market, piling on long positions and sustaining that rally. That's the pattern that the rest of the ag markets would hope to find something like that. You spark the interest and you get that investment money that builds the rally.
The news helps push the market, not just always the signals, is what you're saying. Okay. Is it time to make a sale in cotton, or do you hold it for a little longer?
I think you can afford to wait here. I don't think that rally is in danger of falling apart in a volatile way. So give it some time.
Let's move on to the livestock sector here. Again, didn't ask you what you had for dinner on Christmas, but there's a lot of people who have beef, whether it's that prime rib or something like that. It looks like we had a lot of beef served at Christmas. Market's moving higher.
Yes, the economy loves it. I will do a quick shout out to the American lamb industry. We had lamb roast. But the beef industry, I think they're both doing well. And yeah, everybody's happy here that there's money to be made in that industry. And it's optimistic going into 2018 as the economy continues to improve, the global economy continues to improve. We should continue our strong exports. It's all looking up for beef. I mean, I don't think to the extent that we're going to re-see the highs that we saw a couple of months ago on the futures charts necessarily, but I feel profitability-wise and stability-wise, prices should remain strong in the beef industry.
Well, and that's cattle. Feeders were up 4.45, 3% on the week. There's a lot of them off of the or out on pasture. They haven't come back into the feedlot yet, have they? Or have they now? Has that changed? There's
a lot of feeder cattle out there. That's the danger here, is the calves that came in October or are coming in now, coming in off of the stocks now. The danger is that as they are fed and brought to market as fed cattle in the spring, there's going to be a lot of them. So, and I hesitate to even advise this in a world where the cash market and the futures markets do tend to disassociate so much. But this, I believe, is really an opportunity to be hedging. If you're feeding cattle and expecting to put those fed cattle on the market in the spring, there is the opportunity now to be locking in that 144 or that 120 level in the fed cattle market rather than waiting for that to fall apart.
A specific point there. Very good. Like to hear that. Do you buy into we might slow some of that growth and some of that weight because of the cold in cattle country? In the near term, sure, we should probably see some lower weights as we're coming in. But yeah, so I don't know that I would hit the button on making that hedge just yet. Like you wanted a specific price, if you were doing this as a technical speculation, you would wait until it gets above 124, and it's not there just yet. But if you're doing this as a marketing hedge, right? The risk of it falling apart before June, maybe you don't need to wait that long. Okay. What about the hog market? That one again, normally it might move different, $1.80, 2.5% up. Is demand the story in this market? Yeah, absolutely. We have seen the inventories in cold storage are declining month over month, year over year. So this is not a matter of just processing these hogs and not having any place for that meat to go. It's going. It has been consumed, and the market is expecting to see that demand continue for the next several months, not necessarily fall apart after the Christmas season. So things are looking up for hogs. On the chart, they may hit resistance here at 73 cents. But again, stability-wise, strong, demand-wise, things are good. And when you're pulling out of cold storage, I mean, does that cause a little, I won't say panic, but a little more immediacy and maybe pulling the trigger? No, I think all it does is give you some confidence that the huge supplies that are coming to the slaughterhouses week after week, huge, 2.6 million head per week, is that what's happening these days? Somewhere in there. I mean, so the fact that the cold storage is getting drawn down, that just gives us confidence that there will be a place for the new slaughter products to go. 15 seconds on this one. The dollar, it has had 2 weeks of declines. Is there a third week coming? I think my outlook on the dollar would be neutral. You know, in a normal world where you're expecting higher interest rates several times than
3 more times in 2018. The expectation would be for the dollar to continue to churn up. So given the trend, I'd say the outlook is neutral.
All right. Thank you, Elaine. I appreciate it.
Thank you, Paul.
That will wrap up the broadcast portion of Market to Market. However, we will keep the conversation going, including answering more of your questions during Market Plus, which is available in podcast and video form on our website. And we know rural America is full of great moments and photos. We publish some of the best images we have taken and share them on our Instagram page. Give us a follow at IPTV Market and be sure to check out the frequently updated stories section. Always a lot of fun there. Join us again next week when we'll see how researchers are combating a devastating citrus disease. So until then, thanks for watching. I'm Paul Yeager. Happy New Year.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.